just shy of its all-time trading highs. We had a really good push in the last week on gold prices. Um, this continues to be one of my favorite trade setups at this time. So if we do see pullbacks, I will stay in the trade. I'm fine to sit through a pullback, but I do plan on stopping out of gold if needed if we break this support around the 3120 to 3140 zone of support. So I like this quite a bit. Still bullish on it. I did get something interesting pop up on the Edge Finder today. We got a NASDAQ very bullish reading for the first time in a very long time, which, as you know, you guys know I love trading the NASDAQ. Still some price action stuff that I think we need to chop through together to discuss a little bit. But we've got NASDAQ on the list. Hold on, I'm going to sneeze. Excuse me. So we got NASDAQ on the list. We got gold still very bullish, strong reading there. And so I always kind of have to remind myself and others how we use a top setup indication from the Edge Finder. Like, what does this mean? What does very bullish mean? Because oftentimes people do make the mistake of thinking very bullish means I'm getting long right now. I'm taking a position. That's oftentimes what, people think that I'm thinking when I see this. And while it does significantly increase the probability that I'm going to take a position, just because we get a bullish reading on the Edge Finder does not mean, oh, I'm in the trade right now. Okay. So the Edge Finder is a screener. It screens a whole bunch of data, but it is not necessarily a market timer. Like the Edge Finder does not tell you like, oh, right here, long with a stop loss here. Gold's been a bullish reading for like a couple weeks now on the Edge Finder. So it's been getting a bullish reading. So that doesn't tell you when to buy gold. It's not really designed to be that. It's designed to be a screener that uses a mix of economic, technical, and sentiment data to give us a general read on charts. So let's dissect this gold reading here, right? So I went long gold after it popped up on the Edge Finder's top setups page and it pulled back to a level that I really liked. I took an initial attempt to get long on gold right around the 38.2% retracement. So it had this big push up, it pulled back, and I went long at the 38.2% retracement. That trade stopped out, so I took a loss on that idea. And then when we spiked lower down into the 61.8% retracement, that was my second attempt to get long gold, which worked out much better. So we've got now the gold pullback that I was looking for, plus the Edge Finder reading getting a bullish, right? So if we're getting bullish from the Edge Finder, and then I have a technical setup that I like quite a bit, there's a high probability that I'm going to take that trade and I'm going to risk small in case I'm wrong. And if I'm right, I'm going to try and let that trade run.
Well, that would also be a look into what this market may be pricing in on gold, right? If gold is going to be seen as this like fantastic safe haven, let's go back to 08 to 2011. Did it go 600 bars? It sure did. Okay, now I'll give you your 600 bars. Okay, I will give you 600 bars. However, close, 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 close. And right now, gold does not look like that. So we have 1, 2, 3, 4 attempts to try to find some balance in this dynamic support zone, right? This is the last time that we touched here. That's when we finally hit it. And it was a lot of noise at the top. So you're right. It's 600 plus bars. If we go to the end of the year, we're going to be at 570 bars, 570 plus bars. But we also would be looking way different because I'm curious what the stretch way move was. What was our percentage here from this high down to, so we had a move of about 20%. So if gold gets about 20% away, again, I wouldn't like sell the top, but I would just be expecting gold to turn a little bit more bearish. I can take nibbles at it. I can do a bear put spread at the high and see if it crashes, right? If we find that 200 moving average, there's plenty of distance to be right within maybe 30 to 60 days. So, I mean, and all it is just a near-term income trade to trade the technical probability. So, look, hypothetically, if we go all the way to the end of the year and gold has still not hit the 200 moving average, it's probably a trade for 2026. So I can start taking some bites, maybe some bear put spreads, probably bear put spreads over bear call spreads. I don't want to be assigned short on anything. Um, but yeah, if we stretch to 17, 18, 19, 20% away, I'm going to get more of a, top called on gold. Okay. But good point. I'm glad you brought that up. So, it's not like 380 bars has to be a topping sign, right? But during this, this is '08 when the market was, in full, calamity. The bottom would have been September '09. So as the markets were dropping hard through '08, I'm curious where this top was. August 2011. Hmm, interesting. But what I think also is gold, when we actually stretch that way, you notice how gold didn't become a good trade for a while. Like that run up became probably a 50% pullback, right? I think I have that fib right here. It's got to be close. So yeah, we pulled back to around that 50 to 55% zone. Wow. Yeah. After topping out with a 20+% overextended move and 600 plus bars. So yeah, fast forward to now. I mean, this is what I'm looking at. It's like we haven't really had, other than maybe one decent test. I would say that was our one decent test right there. So since this started, I'll give like sideways was close but still didn't touch. We've had one test, not four, right? But different market. History doesn't repeat, it rhymes. So if this gets more exponential, it's great to be enjoying your run in gold. But what's not great is at some point this probably gets so far stretched away that it's going to be a drop. Okay. So right now I'm going to change this blue line because we are not 20% overextended. But let's have a look. So from current price to now we're about 19. I mean, we are pretty darn close, man. There's 20% right there. So from this candle with this recent high, that's about 20% overextended. So it's got to be like from an extension standpoint, I think it's close. From a bark standpoint, it has been longer. But I wouldn't be terribly surprised to see this fall. Now, what am I going to do with gold? Nothing. I'm going to hang on to it. I'm just going to stay long. Now, if we go longer, if we go out longer, and this bar count gets to 500 plus, I'm going to start taking some stabs at it. At the very least, I'll be protecting my profit along the way and probably start taking some income trades to the downside. So I firmly believe the technicals will win out. I think we're going to have a reversion at some point, but I'm not here to call the top. So if we go higher, that's a sign of the times. Markets are uncertain. Gold's a great safe haven. And so far still looks pretty darn good.
If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses, and much more.